Hey, good morning, everybody. It's Alex with Evolve Real Estate Group with eXp Realty. Wanted to come live and share a quick real estate market update report for Frisco, Texas. I was digging into the numbers this morning and really uncovered some very good data. And I wanted to share it just in case there's anybody out there who's thinking about buying or selling a home. And right now it's very important. If you're thinking about buying or selling, you have to understand what is happening in the market. You have to understand the shift and the change that we've seen here in the market over the last 3 to 4 months, really since January, from January to now August 1st, 2nd. We really need to understand what's happening. So my goal is to come live and show you some actual data and what I'm looking at every single day in order to help and prepare our home buyers and sellers to navigate a changing market. When markets are changing, it's a little bit more difficult because you can't look at historical data. For example, if you're a seller, you cannot price your home today based on homes that sold in the last 6 months, because homes that sold in January, February, and March, those buyers had 3% interest rates. So they had much more affordability, 20-30% more affordability. That's why we saw homes getting offers of $50, $75, $100, $150,000 over asking price because money was cheap. So you cannot make that mistake as a home seller. And I'm seeing it every single day in the MLS right now. Sellers are working with agents and unfortunately aren't making the proper adjustments on how to sell their home in the current market. Home buyers, listen, right now is a great opportunity. Great opportunity. Yes, interest rates are up. I understand that. But home values, what you actually have to pay for a home, is dramatically reduced. It is going to offset the difference in payment, which is the most important thing. Is what is your payment? See, because buyers today aren't paying $100,000 over asking. So the difference in which you would have to pay for a home is really offsetting the difference in interest rates. But today's buyers have a huge advantage because you'll be able to refinance out of these rates when rates decrease in the next 1, 2, 3, 4 years. People who bought a home 6 months ago who really paid top dollar, they're going to struggle to refinance because what they paid for the house, it may take several years for the market to catch up. But let me show you the data here. I'm going to share my screen. Let's make sure we've got the best data. This will be awesome. Okay, so I'm diving in. This again is just for Frisco, Texas. So I'm looking at the number of homes for sale. This was the biggest challenge most people had. And I know it's probably a little hard to see. Let me see if I can blow this up on the screen. There we go. Okay, if we go back January of 2022, in Frisco, there was only 89 available homes for sale. So obviously, ton of buyers. I think Texas in the North Dallas market added 97,000 people moved here last year. So with that amount of demand, you can tell there's a lot of buyers in the market. 89 homes, people had to compete aggressively and overbid each other to get a home. Well, let's just see what that number has done from January to July. This is the end of July, just a day or so ago. Inventory levels are up to 634 homes. That is an absolute giant increase, over 6x the amount of available homes. So now as a buyer, you actually have more homes to go look at. Listen, if you tried to buy a home in the last year or two, I feel so bad for you. I know what that experience was like because we were taking our buyers from house to house to house, and we got a 24-hour deadline to go write an offer, and we've got to go $100,000 over. I feel your pain. I experienced that the last 2 years with you. Here's the reality. That doesn't happen anymore. You now have 6 times the amount of inventory to choose from. And because interest rates have gone up, about 20% of buyers are no longer in the market because they simply can't afford a home. For example, if you were in the market for a $400,000 home in Frisco and rates went from 3 to 6, you just lost 30% of your purchasing power. Every 1% that interest rates go up, buyers lose 10% affordability. So the average buyer there lost 30%. Well, 30% of 400 is 120,000. That means you were only qualified for the same payment. You would have had to find a home for $280,000, which doesn't exist in Frisco. So you have now been priced out of the market, most likely had to get back into a rental. So as a buyer right now, there's less buyer competition and 6 times more inventory to go choose from. So let's take a look at some additional information. The increase in inventory, here's another graph that to put this in perspective. In January, there was 0.3 months supply of inventory. Supply of inventory is the number of homes on the market. And then if you say, okay, here's the buyer demand, how long would it take this group of buyers to buy up every home in the market? It was 0.3, 9 days. 9 days. A normal real estate market, balanced real estate market, 6 months. Let's look at where we are at the end of July. 2.8 months supply of inventory. So that really should bring to light the amount of inventory coming to the market. Now, here's the thing you need to understand, and this is good for home sellers. It's still a seller's market because we still don't have enough inventory on the market. 2.8 months. We're still 3.2 months short of a normal balanced market. So you have to understand what this data means. It is still a seller's market. However, buyers now have options with less competition. They have more inventory and selection with less competition. Here's the other thing. If you're a buyer or seller, you're going to want to understand. Look at the peak here. Homes in Frisco were selling for 110%. This is the median, which means the median home sold for 10% over asking price. So if you were looking at 500,000, that home probably sold for 550. If you were looking at 6, that home sold for 660. Now that was the median. Great homes, the best homes, the nicest homes. Some of those homes were selling for 20, 25, 28% over asking price. Well, let's look at where we are now. We've come all the way back down to a median of asking price. So what does that mean? If you're a seller, you're still getting top dollar. If you're a buyer, you no longer have to go dramatically over asking price. So you've gained back affordability. Even though interest rates have gone up, you're no longer having to pay that wild 20% over asking price. So let's let that sink in. You may have had a lower interest rate in January, but paid 20% more for the house. Now, interest rates have gone up. They've actually come back down. Great news. Please tell everybody you know who's thinking about buying. Rates have come back week over week over week. Right now, we are looking at probably the lowest rate we've seen in, 6, 8, 10, 12 weeks. We're back into the mid to upper 4%. So you're only talking less than 2% increase from January. This is a great time. Rates went from 6.3 to under 5% this week. So if you're on the fence as a buyer, call your agent, call me. Let's go look because you're going to want to lock in that low interest rate. So if you are now at a decent interest rate and you don't have to pay 20% more, we need to look at your monthly payment because the person who bought in January but paid 20% higher price, their monthly payment might actually be higher than where you are today if you had a 5% interest rate because you don't have to pay 20% over premium on these homes anymore. Let that sink in. That's the opportunity. Now, the last thing I want to show you is the showings per listing because this talks about the competition for buyers and for sellers. This is going to let you know what you need to understand when you put your home on the market. In January, the average listing had 44 showings on it. At the end of July, the number of showings per listing was down to 8 showings. What does that mean? It means with fewer people previewing homes, it's going to take longer to generate an offer. You're most likely going to receive fewer offers than what we saw in the past. We were getting used to 10, 15, 20 offers per showing or per listing. That's not happening anymore. Buyers, you may be the only offer or one of 2 or 3 offers right now. Less competition. So everybody needs to understand this is the reality of what is actually happening right now in the Frisco, Texas market. And I use Frisco, but here's what I can tell you. If you're in Plano, you're in Prosper, Salina, McKinney, Allen, Little Elm, the North Dallas suburbs where we are experts, this trend is happening everywhere. I just happen to use Frisco because that's where I live. But again, this trend is happening everywhere. So if you're a buyer and you just took yourself out of the market because the last 2 years was painful, you lost out on offer after offer after offer, you got tired of the short deadlines, that's not happening anymore. Give us a call. Let us go find you 2 homes that you love. I guarantee you're going to get your offer accepted on 1 or 2 of those homes. You're not going to have the competition level. You'll have way more homes to preview. Now, if you're a seller, who you work with right now matters. If they don't understand this market, they're going to give you bad advice, and your home is going to sit, and your home is eventually going to have to price reduce, and chase this market to where it's at now. I just met with a seller yesterday and we looked at their neighborhood. In their one neighborhood, they've had 3 listings in the last 6 months make price reductions totaling over $100,000. There's a listing that just went pending. They started at $850. They came all the way down to $750 and finally went under contract. This is happening every single day in our market. If you're not working with a real estate market expert, somebody who understands marketing, positioning, trends, and is paying attention at this level to the market, well, unfortunately, you're probably getting bad advice, and that's going to cause your home to sit on the market, and you're eventually going to lose out on some equity. So I wanted to share that because I was digging into this, and I just thought this was fascinating, and it really brings to light the shift that we've seen in the market from January to now the beginning of August. So my goal is always to bring you the most relevant, up-to-date, real market statistics, not what the news is talking about, not doom and gloom, what's really happening. This way, if you're buying or selling, we could put together the best strategy for you to take advantage of this opportunistic market, because sellers are still getting top dollar, but buyers have more selection, more affordability, and less competition. So it's kind of that neutralizing the market, getting back to the pre-pandemic levels. This shift is probably going to continue to happen over the next several months. But what is not happening is a decrease in home values. So if you're waiting for pricing to come down, that's not going to happen. Get with your agent, call me. I'll show you every bit of data that shows you until inventory gets to 6% or higher, or 6 months of inventory or higher, you're not going to see price depreciation. What you're seeing is a deceleration. You see home values grew like this, 15, 20, 25% annual. And now they're doing this. It's very slight. It's decelerating back to normal levels of 3% annual price appreciation. But home values are not going to be going down. Everybody expects the next 4 years we're going to see anywhere from 3.2 to 4.7% price appreciation. So if you're sitting on the fence, here's what I can tell you. Home values are only going up, and interest rates have more pressure to go up. A lot of people are expecting we'll get back into the 6s by the end of the year, because the Federal Reserve will most likely make several additional rate increases here to their overnight lending fees. And that could change the sentiment of the market and, cause interest rates to kind of bounce back up. So they're fluctuating right now. So when you see a dip in rates like we have right now, you need to be out there. You need to be writing offers. You need to be locking in that low interest rate so you can get the affordability. I'd love to be a real estate resource for you. I'd love to talk about the market. We do strategy sessions with every single one of our buyers and sellers, so we all understand the opportunities, put together a strategic plan of how to buy in this market, how to sell in this market to either maximize your equity as a buyer in the future or maximize your profit as a seller when you're selling. Give us a call, reach out to us, send us an whatever way you want to communicate. Set up a 15-minute in-person Zoom call. We do those with buyers and sellers every single day. Let's have a strategy session and talk about the opportunities that are going to be in the real estate market for the rest of this year and into 2023. Appreciate you guys. Do me a favor. If you thought this information was useful, please share this post with anybody who you know is thinking about buying or selling a home in the next year. Or if anybody just wants to keep current in the market, you're keeping track of your home's equity, your investment, please share this. We'd love to be a real estate resource and your market expert here in the North Dallas suburbs. We appreciate you guys. We will talk to you soon. Feel free to reach out if you have any questions. We'll talk to you soon.